The outlook for Australia's struggling retail sector has improved this year thanks to the Reserve Bank cutting interest rates, which has given Aussies more cash to spend. Joining me now is business reporter Edward Boyd. G'day, Ed. Good to see you.
Kenny.
So we are expecting this data to come out today. It's the monthly retail sales numbers.
Yeah.
So what are you expecting there? Are we expecting a strong lift?
We are. The market's expecting a strong lift in retail sales, up 0.5% to about $38-39 billion. And really, it's because, as Kenny said, the outlook for the retail sector has got a lot better this year. The Reserve Bank's cut interest rates twice. They're expected to cut interest rates next week on Tuesday. There could be a couple more rate cuts before the end of the year as well. So Australians are saving more money into their bank accounts, assuming they're not spending it all on their home loan. And they now have a little more cash to spend out in the economy because the retail sector has really struggled for the past couple of years. People have tightened up their spending. They've only spent money really in the supermarkets as opposed to out in discretionary retail. And we're starting to see changes, Kenny, to those spending habits. I don't know about you, whether you're splurging at the moment.
Oh, no, I wouldn't say I'm splurging, but
Yeah.
I mean, with this lift in discretionary spending, who are the big winners there?
The big winners are companies like Myer, David Jones, fast food, quick service fast food restaurants, things like Guzman and Gomez, Domino's Pizza, KFC, McDonald's. People in the past may have skipped these sorts of places and cooked food at home to try and save money. Now Aussies have a little more money. The theory, at least, is retail sales numbers that have come out today will increase by 0.5% during May. And we're going to see a bit more of an increase throughout the rest of this year. But remember, the Reserve Bank has deliberately been cutting rates to get people to spend money because household consumption, people spending money in the economy, is one of the biggest things that drives economic growth. They obviously don't want us to spend too much because then inflation will go up and they'll need to start raising interest rates.
Yeah, we don't want to go back there.
It's a very fine balance.
Absolutely. Now, building approval numbers, they're expected to come out today as well. And this is a good indication about where we're going with housing supply, right?
Absolutely. So the numbers we're going to get today will basically tell us how many apartments and homes were approved for construction during the month of May. Obviously, it takes several years to build those homes and apartment blocks, but it gives you a good idea of where housing supply, how it's going to look in the next couple of years. Remember, the federal government has the ambition or the target to get to 1.2 million homes in 5 years. The numbers we get today will let us see how we're tracking with that target. So far, the government, we've been under that level, but we're expecting to see a pretty strong increase in building approvals numbers during May. It's meant to go up by 5%. It went down 5% the previous month. So we're expecting a bit of a pickup for the construction sector, which means more houses will be built in Australia over the next couple of years.
Gee, it's all positive today.
It is, which is good.
Yeah, it is. Ed, thanks so much.
Thanks,
Talk
Kenny.
to you again soon.